and then you have that upward after hour pressure, you get a lot of people just sweeping through in the money calls, especially deep in the money, right? So, for example, I had gotten paid $1.33 a premium on my 20 calls, but after hours, if the stock and we jumped in around 27, but if the stock's 28, 28.50, right? Then they've already covered. So they're like, the hell with it. Let's just call it. We paid the premium anyway, so let's just call it. We're in the money, and they're expecting it to run from this point, right? So that's why they do it. So whenever you sell deep in the money and you get high volatility, especially after hours, don't be surprised if your stuff gets pulled. That's why you always sell past your break-even point.
Yeah.
All right, you take it, Nick.
Yeah. So what he's referring to, and I started recording already. I'll just show you guys what he's referring to, right? So let me pull the Palantir options chain just before we start and kick off everything else. But so you can see over here that for the monthly OPEX, the 20 strike calls are going for about 880 right now, right? And Friday we closed at I think it was 27 at close. It wasn't 28, right? It was I think 27 and 30 or so. One sec. So yeah, so the closing price on Friday was about, what was it, 27.80. So these contracts over here have an extrinsic value, the 20 strike, of about $1. So essentially, if you want to own the stock, but you don't want to buy it right now, you buy the stock right now, you sell the in the money calls for 3 weeks out, you collect $1 of extrinsic value, right? Which means that if it goes below 20 by December 18th, you actually own the stock at 19 bucks, right? If it stays above 20 bucks, you make $1, right? So you make $1 on 19 risk, you make about 5.5% or so in basically 3 weeks, right? On a low risk play that you wouldn't mind owning anyway, right? So it's like win-win, right? But yeah, so back to our usual broadcast, right? Which is starting off with the economic data for the week ahead. So this week it's pretty loaded overall because last week was very, very light due to the shortened week. So tomorrow we have Chicago PMI, pending home sales index. Tuesday we have market manufacturing PMI and ISM manufacturing, construction spending as well, motor vehicle sales. And then Wednesday we have ADP employment report. So Wednesday should be pretty important, as well as Beige Book at 2 p.m. So keep an eye on those.
Player of the year last year, Brandon Ingram.
Someone's mic just went off right there. Yeah, so ADP employment report and Beige Book at 8:15 and 2 p.m. on Wednesday. Keep an eye on those. Those should be market movers right there. Thursday, jobless claims, both initial and continuing, market services PMI, ISM services index. And then Friday, we had that big NFP number, the non-farm payrolls number, right? As well as unemployment rate, average hourly earnings, trade deficit, and factory orders as well, right? So we have a lot of data going on next week. And you're gonna wanna be diligent in managing your positions because we're at the area where I'm seeing a lot of complacency in the market, and people expect the Santa Claus rally to resume and run up into January, and then have the January effect and run in January as well. And it's possible that we're nearing a short-term top around 370, 374-ish on spot, right? So be diligent in managing your positions and keep an eye on them for Wednesday and for Friday as well, right? That data should move the markets a little bit. Looking at the expected and potential moves for the week. So thank you very much again to Frankie for doing this great work. We have earnings for Salesforce on Wednesday, I believe it is, after hours. And they are pricing in a expected move of 7.4% in either direction, or a potential move of 10.2% in either direction, right? That leaves room for an upside move to 273 and a lower move down to 222.46. Now keep in mind that last week there were rumors of them acquiring Slack Technologies, ticker symbol WORK, and that may come to fruition during the earning report. If it does, it might do two things. One, cause the stock price to sell off further, depending on how much they're paying for Slack. And two, it may affect Microsoft, as we saw last week when it was mentioned that they may be acquiring Slack. MSFT actually sold off a bit, right? So that might not be a bad play on the thesis that you might see MSFT sell off on that acquisition if it does come to fruition, obviously. But who knows if it'll actually happen or not? Just speculation at this point. Next, we have CrowdStrike, CRWD. They report this week as well. They have an EM of 9.8% and a PM of 13.2%. So upside is 170.77, downside is 130.91. DocuSign also reports this week. So you have a lot of the SaaS providers, right? Basically, you have CrowdStrike, DocuSign, you have Salesforce, you also have Snowflake and Splunk and Zoom as well. So DocuSign has a expected move of 9.6% and a potential move of 13%. So upside is 256 for the week, downside is 197.60 for the week. I'll probably be putting out videos individually for these earning reports this week as they approach on how to play them as well. Snowflake, I already released a video on, so I won't discuss too much more. If you want to watch that, it's on my YouTube channel. Just basically discussing the EM and PM for the week and how to possibly approach it. They have run up a lot already prior to earnings. I'm not sure how much juice they have left to squeeze in their report, and they're very richly valued right now. Like they're one of the most expensive companies on the market in history, in my opinion, right? Based on their revenues. So their potential move is 21.4%, upside 398.40, downside 257.90. So you can see there's a massive range of values for the week ahead, right? About 150 in total, right, from top to bottom. Splunk, I'm not sure about their option chain because I haven't looked at it at all, but I'm assuming it's not as liquid as the rest of the tickers we just discussed. But they have a potential move of 10.2%, upside 225.22, downside 183.34. And then last but not least, we have ZM, which I already did a video on as well. If you want to go watch that, I've discussed how to play that and what may happen as well. Also Tesla, which I just released a video on as well just now. Given that they've run so much in the last few weeks on the S&P inclusion news, I think they're going to see a cool down pretty fast because they're running really hot right now for mega cap this large to keep running on no actual fundamental change in their business model or in their business situation. It's kind of crazy to think they're going to keep running after they've already run 46% in the last couple of weeks, right? So keep an eye on that as well. That should cause a lot of volatility in the S&P actually once they're added, given how large they are. Also, Square hit all-time highs last week, as I discussed last Sunday. And they're planning to keep running to around 220, 230 a share in the next month or so. That's my thesis there. What else? PayPal, same thing. They're following there too. And you're looking at also Palantir, right? So Palantir we discussed at the onset. I'll discuss that in a sec as well too. So Palantir is interesting because no one really was talking about them when they're puttering around $9, $10 a share, right? And then they took off to around 15-ish. They had an earning report. It was a good report overall. It pulled back on the report down to mid 14s, and then it shot up by end of the week, right? So that's where I went to like 1820 or so. I'll pull the chart on that actually right now, and we can look at that too, right? So here's a chart on Palantir, and I'll do a deeper dive here just because may as well discuss this right now. So it's run up substantially since basically November the 4th, right? So in about a month's time, it's gone up back from $10 and change, hit a high of what is it, 33.50 on Friday, and it closed at 27.70, I believe, right? 27.66, right? So that's a very massive run, even on a weekly basis, right? If you look at the weekly candles too, you can see 1 month weekly. We can see that it had a massive candle this past week, right? It went from 15 close last week. I hate these lines. They never go accurately. Okay, here, that should work better. And it closed right over there. So it was up 56.2% for the week. And obviously a lot of this has to do with funds buying in, but also with, Robinhooders and Wall Street Bets guys, posting, incessantly about Palantir, right? It's kind of funny to see. It's a changing of the guard, if you will. A different paradigm from conventional investment methodologies of using fundamentals to invest. Now you're seeing kind of more social sentiment, if anything, right? And I think that we can see, substantial moves to the upside or downside as well in the stock in the short term. But I do think it's a good bet longer term. The reason why is if you look at the valuation of Palantir versus Snowflake, for example, obviously they're different businesses, but looking at the valuation, right? That's what kind of gets me is if I pull up the valuation model, one sec. Someone just joined. Let me just change my screen. So if I pull up the valuations, you can see, so Palantir is currently worth about $51 billion, and they have $1 billion in sales. They're not yet profitable, right? Let me look at Snowflake, right? They're trading at a valuation of about 84 billion. So about 60-70% higher than Palantir's market cap, right? And their sales right now are 400 million and change, like 402 or so, right? So you kind of see that it is possible for Palantir to easily, push up to like the $90 billion market cap area, which would imply that there's about 80% upside on the stock right now, right? So if we go from the current price of 27, let's say 70 times 1.8, that takes us to about $50 a share, right? That is reasonable based on the notion that the market's fine pricing Snowflake at a valuation of 84 billion with half the amount of sales, whereas Palantir is trading at a valuation of 50 billion with double the amount of sales of Snowflake, or more than double the amount of sales of Snowflake, right? Obviously, they're both SaaS businesses, different segments and different customers, but the same token, they both deal with data as well, right? So I'm going to keep playing Palantir just because the volatility is amazing and the premiums are great. It's great for scalping. You can get in and out really, really fast and make some good money. For the week ahead, looking at the closing price of 27.70, the expected move on the stock is about, I think actually Frankie covered it in that chart. So I'll pull it back up again, one sec. So the expected move was 22.4% in other direction. So upside of 34.02, downside of 21.56. And the potential move for the week for Friday, December 4th, OPEX is 30.1%. So upside of 36.17% and downside of 19.41. Upside of $36.17 and downside of 1941. Right. So that's what I was talking about earlier in doing that strategy where you buy the stock right now, sell the in the money calls for December 18th OPEX, capture $1 of the extrinsic premium, and basically you're happy owning it either 19 or making $1 in the next 3 weeks or so. Right. That's the whole idea behind that strategy. Right. So looking at Palantir overall, some strategies that might be really interesting would also be credit spreads on the put side. Because of the high IV right now, you have the volatility premiums sitting at 174 roughly on the IV. This is insanely high, and I don't think it can go higher, right? Just because right now we're seeing 20%, 30% swings each day, right? That's pretty much the pinnacle of IV you're going to see. I think we're going to see contraction in IV in the next month or so, right? So given that, it might be wise to go out of the money and even sell, cash secured puts. 18 strike, for example, you can get 70 cents right now for December 18th. If you want to go to January and you really want to own the stock at a cheaper price, you can go January OPEX. You can capture yourself 85 cents at the 15 strike, which means you're owning it at about $14.15. And obviously, that's about half the price it's trading at right now, right? So it is a month and a half till expiration, but you're saying, you know what, I don't mind collecting myself 85 cents on risk of 14.15, right? So you're making pretty much 6% return in a month and a half, or you own the stock at 14.15, which is about half the current price, right? That's not a bad way to play it. Alternatively, if you do think it's gonna shoot up to $50 pretty fast, which it may, right? You got to look at playing with call spreads, because buying calls outright, the risk reward just isn't there right now, right? Like for example, if you buy the 30 strike call for December 18th, a few weeks out, you're paying $4.20 premium. even if it goes to 50 bucks, you're making 4x return, right? That's phenomenal, but only if it goes there in the next 3 weeks. If it doesn't, you stand to lose possibly 420 in premium, right? If it goes to 40 bucks, you're going to make pretty much 1.5 times your money, right? In profit. So you're making a 150% return, right? Which is still great option wise, but again, the risk reward isn't there. So using spreads makes a lot more sense. And by that I mean, for example, you might buy the 30 strike call and then sell the 40 strike call, right? And in that case, you have a debit of about $2. Now you have a risk reward of 4 to 1. Your break even is 32. You're risking $2. Even if it putters around like 28, 30 bucks come expiration, you're probably still going to see about $1 of premium there. So your risk really is only about $1 unless it plummets down to like 20, for example, right? So there are better ways to play it than outright buying calls and puts. And a lot of people kind of just negate the fact that the IV is so bloody high that buying calls or puts outright is just, it's honestly a stupid notion. It's not very smart, right? Buying when the IV is low and you're buying premiums for 30, 40 cents out of the money, your asymmetry of risk is phenomenal. But buying premiums at $4 or $3 for $7 out of the money, it's absurd, especially when it's on a short duration contract, right? So that's my little mini rant on Palantir. I am going to keep playing it every day pretty much because it's been great to me. But yeah, if you have any questions at all, just hit me up and I'm happy to talk about Palantir, obviously, right? Otherwise, looking at SPY for the week ahead.
Nick, before you move on, can I just add 3 things to Palantir?
Yeah, of course, go for it.
All right, you guys have to know your levels. Just don't jump in at any price, okay? Look at the charts and ask yourself, where did this thing stop? Where did it putter around? Where was their interest, right? Where was their volume, right? So you have to remember those levels because the market has a memory, right? It doesn't forget these levels. So 3350, and everybody knows who is on the chat, and you guys should jump in on the chat. We call these out right, and they hit right before they we called it out and then it hit. 3350 was the top. You want to go aggressively long on a breakout of that, not before. If you're at 32, wait to see it break 3350. Don't buy only to get rejected at 3350 and then be like, oh damn, I'm down 20%, right? So location matters. 2863 was a killer level. Go draw a line. And remember, when you draw these lines, it's not a hard line. It's a zone. So plus minus a little bit, right? So don't treat it as a rigid line, right? And then 2638 was magical, right? And again, if you look at it, it went down to that level and it whipped right off of it. Below that is 2256. So if you're going to really play Palantir, these are my levels, right? Everybody's going to have their own levels. Look left and find places that you see comfort at, right? 2-3 hits on a hourly trend line, on a 4-hour chart, and wait for those and wait for confirmation. Just don't wait for a tap. Wait to see, does it break it or does it bounce off of it, right? And then enter the viable positions. If you're going to sell below these levels. If you have an option to sell 27, for example, or 25.50, I pick 25.50 even at a lesser premium because I have 26.38 to defend me, and then I have a whole number of 26 to defend me, right? Because whole numbers do matter. In this case, it would be more of 20, 25, and 30, but even 26 will putt around for a second before it moves, right? So always look before you jump into your strategies, right? Just don't jump right in. Now, Nick also talked about there are many different strategies. If you don't know it, but it sounds good, don't do it. Don't do it. If you really don't understand it and you're on chat, everybody helps out, right? Just ask before you pull the trigger because sometimes you might set it up the wrong way. But here's some of the things you can do. You could sell in the money calls by buying it. So it's a buy right, but it's called a buy right, but when you buy it, you sell the call in the money, right? And you want to always make sure that when you do it, you're getting extra premium over your break even, right? You could sell puts. You could do a put spread and hold it two ways on a credit. You can split it if it breaks below and keep the premium and own the stock and take the profit on your protection side, or you could just treat it like a credit spread. You could do an in the money debit spread, which is what I typically do. Some people will go out. So, for example, if we're at 28, I'll do a 27.30, a $3 wide, where somebody else might do a 30.33. And the reason I do it is because most of the premium is already in Centric. So I have a better delta. And if you're doing spreads, you're not really waiting to the expiration on a debit side, because you have to literally wait to the last day to get the full length of the spread. So you're really typically going for anywhere from a 50 to a 80% move, right? So if you're already in the money, you're going to go there faster. And though, yes, you will take a little bit more of a hit with a bigger delta, you usually can get out quicker, right? Than when you're far out of the money. But my key takeaway is, please know your levels before you jump into any play on Palantir. And don't chase. You will get an opportunity to come back. Location, location, location. You get in at a good location, that's where you're going to make your money. That's all I had.
Well said, Ashish. I appreciate that a lot. Hopefully you guys understand what he's talking about. But yeah, I mean, I don't have much to add there. I just noticed actually in looking at the option chain, basically instead of buying the stock and selling the $20 call option, which ties up about 2K of capital, you could simply just do a put spread over here for a credit. You'd sell the 20 strike for 3 weeks out, December 18th, and you could then buy the 15 strike. You capture about a $1 of premium here, right? So again, it's the same difference. At that point, your risk obviously is $4 to the downside, but it's the same amount of risk as if you were to buy the stock and sell the $20 call in the money for $1 of extrinsic, because your break even is 19. So if it went to 15 anyway, you'd experience the same kind of loss, right? So the only difference here is that your collateral or your margin is only $500, right? So probably a better strategy would be sell the 20, buy the 15, do a debit put spread, capture $1 credit, wait 3 weeks. If it goes below 20, you can then take your loss and then buy the stock at whatever 18, 17, whatever it is. It's the exact same loss you'd incur if you were to buy the stock and sell the $20 call anyway, right? Only difference being is you're just tying up less capital in margin, right? You're tying up $500 versus like 2K, right? That's all it is. So there's so many ways to skin a cat when it comes to options, right? Like there really is an infinitesimal number of strategies you can possibly use with options, and it really depends on what your overall thesis is, time horizon, risk tolerance, desired risk reward, adjustability, and stuff like that. Like, can you watch a position all day every day, like like I do or Ashish does, for example? Are you working full time and you can't watch it, and if an adverse move occurs and you're not there to adjust, you can't, you might get burned, right? So you got to consider all these different things when you're making trades, and you want to avoid making trades that you can't monitor, especially on short-term time horizons. That's why I say if you're not at your screen all day every day, avoid trading the weekly OPEX, right? If you're going to trade it, you got to set in a bracket order, like an OCO order, setting a stop loss and a profit taking target as well, right, on a limit order. But again, if it expires where it doesn't hit your stop or your limit order, and then you hold overnight, you have gap risk, right? So there's that as well. I don't really know how much more I have to add on Palantir. Like, as I said, the range of values are pretty wide, and we can see that even for the January OPEX, January 15th, right? You can see that the potential move now is about for January OPEX, it's about 13 plus. Wow, it's a massive move. It's about plus, let me see, 13 down would be 4, so 17. So it'd be about 44 to the upside, roughly. Yeah, 44 or so. upside, and then to the downside, obviously 28 minus 14 or so, right? So looking at about 14 to the downside and 44 or so to the upside. So keep that in mind too, right? And again, the IV is really high right now. I do expect it to contract. I don't expect it to continue up like this because typically the option market works pretty efficiently in the sense that when premiums are super high, at a certain point, you get less demand for purchasers of options and more demand for selling. And then what happens is that less people start buying options, and then you pretty much see a pullback on the buying, and you see more selling happening. And then at a certain point, it kind of levels out, and the stock price stagnates for a few weeks, and then it burns a bunch of premium, and then that's what happens, right? It kind of levels out the IV. So hopefully this helps. I guess we'll probably cut it over here. Any questions at all, guys?
Yo.